Hi, everybody, and welcome to today's event where we will take a deeper look at the SaaS sector. What we will be looking deeper into is the growth rates in the software sector, the trends, especially in an environment where there's still quite a lot of debate how the uncertain macro environment will affect these sectors. Also, another reason why we will focus on, you might say, the growth and the growth trends is we have a sector that has moved in lock stock together with interest. First, extreme multiple expansion and a multiple contraction. You're not really looking into different companies. We are maybe seeing a little sign that investors should look at individual equity stories and growth rates. And another one is, of course, there's still a huge focus on profitability. That movement has happened, but growth is still a very, very important driver for explaining valuation. And secondly and thirdly, looking into individual companies, you've also seen some trends where some PE and capital funds are buying up in the sector at higher prices, maybe not the most important. What are the characteristics there? That would be important for investors also to focus on, because that might also explain others than growth and other stuff. After the presentation, where we will do our introduction, maybe arguments while we are seeing this, we will dig into this deeper with three companies, Impero, Peneo, and Maps people, and have the focus there. But for now, Kasper, I think I will hand the presentation over to you, and you take us through it.
Yes, thank you, Michael. So let's start overall with some investor topics for the software market. You also mentioned some of them, Michael, here in the beginning, but of course, we still see this growth versus profitability trade-off. It continues in the current market environment, and companies should focus more on profitability. They need to show a road to profitability and also be self-sustainable in terms of, can continue the operations without always searching for new capital, or at least have a plan for how they can get the capital if they have this model. However, we also acknowledge that growth is still essential. So, growth in early years is expected to lead to profits in more mature years. And just a keynote to this one, we follow a guy called Jamie Ball, who's running the Cloud Adjustment newsletter in the United States. And he shows that the next 12 months revenue growth still explains about 45% of the enterprise value to sales valuation multiple. So the growth is still the most essential factor for determining the valuation multiple. But of course, we also see this high interest rates, and this has dragged the whole sector down a lot after some huge rate hikes. This is very important to follow further for the SaaS valuation, but also investors' risk appetite, and of course the company's access to new capital and financing opportunities. So these are some of the key trends also from last year that has continued here in 2023 and is on top of mind for the investors right now. Looking at the point number 2, M&A activities, you also mentioned, Michael, we actually see that some private equity funds are acquiring companies off the stock market. So they access that the market prices are cheaper, or actually maybe better than the prices from the private market. At least they can see that the sector has dragged all the companies down. So now you need you can find some individual stocks that are actually performing very well. And based on this, the private equity funds are not taking companies to the stock market, but actually taking them off the stock market in this scenario. So exciting to see. We have also seen that in other sectors. And we have seen that, for instance, in the Nordics, in Norway, and we also see it a lot in the United States. Also taking sorry, Michael.
Yeah, and I think what it might be interesting for investors there is some of the characteristics. I know there's a widespread of reasons, but I think also looking into the individual cases here, that makes it more important. That is what those funds could do. And if we are seeing kind of some trends, I would like to mention, besides growth, it is that the possibility to be a category leader. If it's larger companies in the US, but if I should see around the space, it's this possibility to be the category leader within there. Of course, consolidation possibilities is also important. And then what maybe equity market hasn't focused that much on, and it's very hard for equity markets to focus on because it's hard to dig that much deep, is the technology side, the technology stack. How is that leading out? I think that some of the focuses that those funds are buying off the market, and that is interesting for investors because when they buy it off the market, they buy it at higher prices than the market, of course, is maybe setting on the general thing. So besides the fact that it's happening, maybe also to look out for this in companies.
Yeah, and also looking into the industry, we see that some of the larger companies are acquiring some smaller companies to grow inorganic instead of, in these harder times of growing organically, they try to consolidate the market and then grow inorganic. So that's also a trend we expect to see continue here in 2023. So, and the third point we have here on the slide is the software end markets. And I guess this is more relevant for today's topic because you need to look into the trends that matter more now. Because back in 2021, we saw that the COVID accelerated the whole digital transformation and the whole sector. So almost any company or software company were positively affected by this and grew a lot. And now you have a more, you can say, more uncertain climate, but also more normalized in some ways. So now you need to focus more on the end markets and the trends and also the resilience in the current market. So for example, we have talked a lot about cybersecurity. These sectors or this sector are really resilient for this current market uncertainty, but you can also follow some of the long-term trends. How are they going right now after COVID? And
and I think an important point is also here that 23 is probably going to be kind of where we would like to follow the churn, because we are talking a lot, some have called it a software depression, a recession, even if there's not recession in the macroeconomy. And I think that's partly because people expect that the companies will prune their investments. During the COVID-19, they bought everything they could. Now they want to keep with what is working, what is needed. So they will still invest heavily, and you will come into that in this sector, which maybe despite many people thinking that this is not growing, that's not true according to many market reports. But the pruning might happen. You might choose which system to have. So when we are talking about this, I think the churn rate will be very important for investors to follow on the companies, because that will be a sign. And also have the net retention rate, of course, where if you can see that companies are really using it, but the churn rate will be pretty important to follow as an early sign that you have a strong offering to the market on the company side, besides, of course, the long-term trend drivers driving that end market.
Yes, exactly, because as you mentioned, the churn rate and the customer base, when it's harder to win new customers, you can change your focus to the existing customer base. And if you have a large upsell or cross-sell potential here, then of course you can still find some, or you can still, as a company, continue your growth rates if you have a huge client base to grow on. So let's also just mention the technology and AI, Michael. We have listened into some earnings call, especially in the United States, and it's not a secret that the AI theme and the attention about this after the ChatGPT release has really been a key focus on almost all investor calls. And of course, if you can find some companies that are very high on the technology level and have some AI which maybe can disrupt the industry, then of course there's a huge potential. And this is maybe also something that, as you said, Michael, the PE funds are looking into. Where can you find something that differentiate in the market and maybe can disrupt it, or at least they do something very good for this market. So that's a kind of way to continue searching.
But I think it's also important to say here that it's broadened out. You don't need to be an AI company. It's just how can you use the AI maybe to enhance your model? Are you able to integrate to a more AI-driven world? There are only a few companies that is trying to banner that they are purely an AI company. But the importance is here maybe that how can you use AI in your business model, and how do you integrate to it? And is there a threat because of AI to your business model? I think that's also part of the discussion. I know there's of course a lot of hype and a lot of share price movement in the ones claiming to be pure AI companies. But the other side should also have investors' attention as much, because that's the next wave that is coming with focus on the artificial intelligence.
Yeah. All right, I think we should move to the next slide, which is more relevant for today's topic. So, of course, we are zooming in on some of the markets in the software sector later on with the three companies. But just on a high level here, we have the global market growth rates expected from Gartner, and we have collected some of the historical growth rates. And as you can see, it has been, it's a pretty good, you can say, growth rates over the year, but lately, or in 2022, it declined from about 15% in 2021 to 7%. So this, of course, has declined a lot, and this is also what we hear from the companies with prolonged sales processes, and maybe some of the companies, or we know that some of the companies during COVID over-invested into this sector. So this is one of the main explanations. But also important to notice that actually it's going to increase according to Gartner here in 2023 to about 9%, but of course still below the highs in 2021. We have also collected some data for the Danish SaaS sector, and of course this is a very small sample size. I think there are 10 companies, and these are only the listed companies, and in earlier stages and having a lot more focus on growth. But having the same sample size here over the 2021 to 2023 period shows that also here that the growth rate has declined from about 43% in median back in 2021 to 27 or 28 in 2022, and it looks like it's going to be quite similar here in 2023 based on mid-range in the company's guidance for 2023. So very exciting to see how this develop over the year. But I think that the guidance from the company may be the best way to track this. And again, we see that the growth in 2023 is almost the same as 2022 based on the guidance. But at the same time, we also see that the companies are having a cash preservation focus and also better EBITDA results overall. So of course, this profitability versus growth is still in key focus. And if they can continue these growth rates and also strengthen their profitability, then it is of course very positive to follow also going into 24 and onwards. Yes, so these were kind of the overall market growth rates and the Danish sector growth median ARR. So of course there are some differences between the growth rates in revenue and so on, but these are based on the ARR, as most of the Danish companies are guiding on. Moving on to the next, we maybe go a little bit away from today's topic, but we know that some of you or most of you are very interested into the valuation multiples and see how this is progressing or developing. It's not progressing that much, but we have seen a small rebound here in 2023. Of course, we saw some very high levels back in 21. We have talked a lot about this, about 15, 16, 17 times ARR last 12 months here based on the US SaaS Capital Index. So this tracks about 60 US listed companies. And this has, you can see this deep decline or the very into about summer or spring last year in 2022, we saw this huge decline. And then it has you can say somewhat flattened out, and then it has just increased a bit here to 7 from about 6. But of course, we are at relatively very low levels right now. But this is also explained by of course, the interest rates, very much impact from this, but also the declining growth rates, of course. So we have seen a lot of things here going on in this sector, but also in the growth markets in general. So it's not only isolated to the SaaS sector, but of course, we have seen that across the board from the growth market or growth sectors. Yes, and if we move on to the Danish perspective on this, as you can see here, the global or US list is about 7 times ARR. Moving on to the Danish one, we have our own index in HC Andersen Capital, and this is based on a smaller, you can say, sample size population, because there are smaller companies listed, or fewer companies listed, and basically most of them were listed back in 22 or 21 and 20. So this is a shorter time period just to when you compare to the former one, we see the tops and then the decline here. So it's the end of this graph we are kind of seeing here in Denmark. And again, it's a very small rebound from about 4.1 or 4.2 times AR to 4.7. So still at very low levels compared to, of course, in the top of the IPO, you can say, cycle back in 2021.
And to say, we haven't taken it with, but we follow some Nordic indexes, and that's around 4. Maybe also a little bit mature companies with less growth rate. So it is kind of maybe a kind of a Nordic, a good way of expressing that, around 4 to 4.7. That's around the Nordic space. If we should not only look into the Danish.
Yeah, and turning back to this point about the PE funds acquiring some of the Nordic companies, we actually saw that. So I think it was a few companies from Norway which were acquired for about 3 or 4 times AR, and I think that was very low, also compared to the Danish sector. With a premium to the existing market share that they have before. So, but we see, or we have seen that the Norwegian market has overall has a lower AR multiple. So they could be due to that the Danish SaaS sector has overall a higher growth rate, but also maybe more immature companies which are focusing more on the growth. So in this sense, it makes it makes sense. Sorry.
Yeah, looking at it, we're looking at the US. They are being bought off around 10 and trading at around 7, right? So maybe it looked a little bit like the Nordics were not, but actually it has been Norwegian companies, and they trade around 2.5, right? If you look at the average, so also still a decent premium.
Exactly. All right, so that's overall our, you can say, takes on the current situation. We would like to share some market updates and newsletters before we go into the company presentations, and just share some information with you. We guess that most of you are here today are following this sector. So I mentioned Jamie Ball. He's behind the Cloud Adjustment newsletter. You can sign up on his on this link here, cloudadjustment, substack.com. Here you can get the weekly perspectives on the US global market. And from last week, one of his key takeaways was that the Q1 2023 looks bad across the board, but don't expect things to get worse than currently expected. So he also made a list over the companies that have provided a new guidance for 2023 compared to the analyst consensus estimates. And based on this, he actually found that the consensus analyst estimates were higher than the guidance. So the guidance from the companies for the whole year was very low, and this maybe illustrates that it looks very bad, or at least it maybe can be worse than they are right now. But of course, this is a claim from him, and exciting to follow this, or very interesting to see how this develops over the current period here. We have just finalized Q1, so the reports will be out here in a few months about the Q1. And also the monthly valuation updates from the SaaS Capital Index. This is something that we track and compare or put in perspective with our HC Andersen Capital Index, where we show the development in the AR multiple based on the Danish SaaS sector. You can also sign up here, as you can see this link. And finally, we have just released our new newsletter about it's primarily about the Danish SaaS list, the Danish SaaS companies. So we are focusing a lot on the reports right now, and I think the next one will be out in a few weeks. So you can sign up here also at our webpage. And if you have any feedback, or you have some knowledge about the private markets and so on, then we of course are very interested to know more about that, and we can include this and put some perspectives on, you can say, what's going on there, and compare that to the Danish listed companies, and also some knowledge about the end markets. Maybe that could be interesting to get more insights to.
And perfect. So to finalize a little bit, if I may, I think people should start looking a little bit more on the underlying market growth, which we are doing today, the growth trends, because growth is rising. I know it's not an R-square 90 as in the good old days, but it's still maybe the most important driver. So investors should understand what I call the equity case, or the drivers behind the company in valuing the companies. And then we also argued some other stuff to look about when, in reality, we looked at those valuations. It's a benchmark you can start with. What should your company trade with a plus? There's a lot of that going into how good are they to use the capital to get the RN and how sticky are they measured on that? So you can put a factor on it at the right, but I think it's important to understand the whole story, because I think there will be more diversification in the future on how people trade compared to the index. And some of the explanation is probably more like in the equity case, or the underlying growth trend drivers and the problem that they solve, and the technology stack and the ability to be category leader will probably be more important in the future. That's at least our argument. We will see whether that pans out, but
yeah, and having said that, of course, we see that some companies right now are struggling a lot with the capital situation. So, and having that in mind, you should really keep track on this, because if you can't fund your journey going forward, then of course the growth rates and so on, they are not important. So that's also why that the rule of 40, if you've heard of this, the cash flow margin plus the growth rate, then it should be above 40. And this also wins a lot more focus right now, because this shows the balancing between the growth and the profitability or the cash flow. So of course this ratio is also very good to keep track on in terms of more mature companies. And when we're having these smaller companies with a huge focus on growth, you need to Michael, we have also discussed that you can also take the free cash flow. How much do they actually spend compared to how much ARR do they get in over a time period? It's also a kind of capital efficiency ratio to measure. So there are different measures here to keep track on. But of course, today we will have the focus on growth and the end markets and trends that also in the light of this current market uncertainty, how will the drivers or trends, how are they expected to continue over the next years? So
Yeah, it was only to say maybe it will move a little bit away from that agenda again, but maybe broaden out, looking at the profitability side, as you said, on the capital efficiencies of the companies if you are not profitable, and of course the rule of 40 as a good rule that everybody is speaking about. But I like more the capital efficiencies. How much ARR are you driving, and how much are you retaining of that? So, but we are not saying that it is not important, but we might see a little bit move, maybe due to a more stabilizing, and it's hard to talk about stabilizing interest in this wildly moving, but we are maybe starting to see it stabilize, and then maybe that focus should shift again. So that's of course also on the back of the companies have guided now. We have chosen to have this thematics. We will have other thematics during the year. So we're not saying it's the only one. We're still not back in the 2020s, right? But maybe it could grow in importance in this year.
Yeah. All right. I think it's time now for the company presentations with Maps People, Impero, and Penneo. And we have a 5 minutes break, and then we're ready to get insights from the first company, Maps People, represented by the CEO, Morten Brøgger. And he will tell us more about the market drivers and the outlook for Maps People. So stay on, and we will just pause this event in 5 minutes, and then we'll be back here again. So stay tuned.